US indices closed lower with the Dow Jones Industrial Average shedding 140.82 points, down to 0.32% to settle at 44,424. The S&P 500 followed with loss of 2.06%, closing at 6,100, while the tech-heavy Nasdaq saw a sharper decline of 0.5%, losing 99 points to end at 19,954. The slight dip in the VIX by 1.13% suggests the market volatility remains muted, with investors digesting mixed economic data and the Federal Reserve latest comment on interest rate policies. The Russell 2000, representing smaller US companies, fell 0.30%, highlighting concerns about growth prospects in the domestic economy. Contrastingly, Canada's market showed slight gains, with the S&P TSX Composite advancing 0.14% and the TSX 60 inching up 0.13%. Meanwhile, in Latin America, Mexico's S&P BMV IPC surged 0.59%, adding an impressive 302.40 points, while Chile's S&P IPSA rose by 0.25%. The gains reflect growing investor optimism in the region amid stabilizing commodity prices and resilient economic outlooks. Brazil's Bovespa lagged behind, posting a marginal drop of 0.03%, weighed down by sector-specific weakness. The global map paints a picture of regional divergence, with Asia-Pacific market preparing for the upcoming earnings season and Europe keeping an eye on key macroeconomic updates. Investors globally are treading cautiously as the market navigates geopolitical uncertainties, inflation pressures, and potential rate adjustment. As the week progresses, traders and analysts will closely monitor corporate earnings and economic data for further direction. Today's commodity market displayed a muted performance with slight declines across key sectors. WTI crude oil edged down by $0.06 to settle at $74.60, a 0.08% decrease. Similarly, Brent crude oil dipped $0.04, closing at $78.46, reflecting a modest 0.05% drop. This shift suggests a pause in the recent energy rally as market digests global demand projections and weigh supply-side factors. Natural gas experienced a sharper decline of 0.52%, losing 0.02% to end at $3.43. The continued fluctuation in natural gas prices underscores the ongoing volatility in energy markets as winter demand battle against ample inventories. In metal, gold eases by $1.60 to $2,777, that is a 0.06% drop, while silver slid by $0.14, closing at $31.04, marking a 0.46% decrease. Despite the small pullbacks, both metal remains near the higher end of the 52-week ranges, suggesting persistent investor interest as inflation hedges and safe haven assets. Agricultural commodities were relatively stable, with soybean losing just 0.01% to end at $10.5, a 0.09% decrease. The flat performance highlights a balance between global demand and production level. Overall, today's marginal decline reflects cautious sentiment among traders as they assess macroeconomic data, Federal Reserve policy directions, and global demand trends. With a relatively low trading volumes, the market seems to be waiting for clearer signals from geopolitical developments and upcoming economic indicators.